Good afternoon, everyone. First of all, welcome to the DIFC Innovation Hub. I'm Mohammed Al-Bloushi. I look after innovation at the DIFC. Today is the first session that we host of DIFC Talks, and our guest speaker today is Sharif Al-Badawi, the CEO of Dubai Future District Fund. Thank you, Sharif, for coming today, and we welcome you.
It's a pleasure.
We'd like to start by telling everyone who you are and what has been your journey been so far. Over to you.
Thank you. Thanks for having me. And just to give a brief introduction about myself, I was born in Los Angeles to Egyptian parents. I lived there most of my life, went to school there, and started my first tech companies in the 90s in Los Angeles. As stubborn youth, thinking that we didn't have to be in Silicon Valley at the time. And contrary to the environment today, you actually did need that network effect, and it was much more difficult for us to gain access to venture capital networks, to find the right kind of startup talent, and to even find customers who are willing to engage with startups. Very different than it was in the Valley at the time. I did a series of startups, mostly bootstrapped. Startups from the mid-90s to about 2009. None of them really made it that big, but they were really great learning experiences. Everything from consumer internet, a lot of e-commerce, even mobile and desktop website applications that we were building. And then, in 2009, I joined a friend of mine who was starting a mobile ad network company called AdMob. He dropped out of business school in Wharton, and some kind of magic. I called a friend, and the friend called Sequoia, and Sequoia funded the company. Sequoia was followed by Excel Partners, by Northgate, and a couple other VCs. And really, like when they say you're on a rocket ship, that this was the environment. And I look back at it now, it's actually a really short period of my life was AdMob. But in memory, it's very long because of how intense the work was and how fast and exciting it was that we were the #1 player in the world. Apple and Google and others were fighting to acquire AdMob, and we ended up, long story short, by 2010, ended up selling the company to Google for $750 million. So that was the first time it clicked in our heads, like all these things you're doing in the garage, right? Tinkering in the garage, to see it through all the way to the end was like really fascinating. I took this opportunity. My wife and I had our first child during AdMob, and then we had 2 more during Google, and I took the opportunity to sort of rest and vest, as they call it, at Google. And from an entrepreneurial point of view, I almost felt like that was my failure period. It wasn't the 10 years of failing startups. It was the fact that I'm not building anymore. I'm sitting somewhere comfortable, like a job like Google. And that ended up lasting. It was the longest thing I had ever done. It was 7 years almost. And the first 5 years there, I spent basically getting AdMob's value in throughout Google sales team. So helping the Google sales team sell mobile ads. And that was a really great learning experience. Like I learned how to do things at massive, massive scale compared to what we were doing at AdMob. Or any of the startups. So just to learning all of that, and then the sort of management skills that you learn in a big company that we don't even see in the small companies, like cross-functional buy-in. How do you build up buy-in over a quarter before you present something new to management or something? So these are all things that were really valuable for me to learn, but I had skipped all of that because I never took a real job before and I was doing startups. So it was very valuable. Free time allowed me to do other things outside of work, and one of them I was really passionate about mentoring startups. And this nonprofit in Bay Area called TechWadi was working with Google for Entrepreneurs. It's now called Google for Startups. And they called me, probably because I'm Middle Eastern, right? Because I had nothing really to do with them. And they said, we're going to do a roadshow through the Middle East, and would you like to come and mentor? I was like, yeah, that sounds like a lot of fun. We went to Amman, Beirut, Cairo, and Dubai, and this was like 2014, 15. And I was blown away. Like, yes, I'm Middle Eastern, but like I've never been to the Middle East for business, and I've never been to any of those countries except Egypt, where my parents are from. And so I was shocked, and I took as many of these kinds of trips out. Tunisia, Morocco, it started becoming the State Department, the equivalent of the State Department in the UK, I was on a speaker's list, I guess, and all of a sudden I'm getting called for all of these things. Some of them were actually countering violent extremism disguised as entrepreneurship training. Because, at the time ISIS was pretty tech savvy, right? So they were going around, not to get political, but hopefully we're all on the same side of this subject. So, they were bringing us out to these villages where social media was being targeted at those youth. And we were coming with lean startup competitions. Do I really care if that youth actually starts a startup? No. I just want them to have hope, right? And feel like they can do stuff on their own and do cool things.
So I think my next question to Sharif is, what is the Dubai Future District Fund?
Dubai has always been top of the charts from work, ease of doing business, best place to live in the region, top in terms of the reporting on number of deals invested into, and top in terms of dollar amount, aggregate dollar amount going into startups. So it's already been hitting the charts. But clearly in the last couple of years, the gaps have become more noticeable.
Yeah.
Right? And this isn't, I think, the first time this idea has come up, but it's the time where it was the right time. And the right partners getting together, and I got a call saying, we're designing this. I think many of the influential people in the ecosystem got calls. And one of the best things I think about what I've seen in the UAE and Dubai is this: they're always listening for feedback and iterating super quickly. And if you're not paying attention, you don't notice it under the hood. But when you start paying attention, you're like, well, Jesus, this was not a thing yesterday. Today, some people said something. Tomorrow, the new decree came out. Like, it's literally that fast. And so this was one of those things that was announced by His Highness about a year ago, exactly. And we started getting the blocks put in order about this time last year. And by May, June, we started preparing to launch the foundational elements of the fund. Dubai Future Foundation and DIFC are the anchor shareholders in the fund with $200 million. However, we have big plans to increase the capital base of the fund and involve a lot more shareholders into the fund. And you can think of it as the vision for this fund is to be the investment or tech investment platform for Dubai and the UAE. Not the only one, but one significant one anchored here.
Just to build on that, Sharif, and again, Dubai has this massive mandate towards becoming a global startup hub, and whatever we do, and I guess this whole floor is kind of trying to lead that mandate. And so how does the Future District Fund kind of fit into that vision, or what is the role that Future District Fund plays there?
So we are a VC fund, meaning our primary responsibility is to invest. I mean, supply capital and channel it to funds, the VCs themselves. So that's half of our mandate is to invest in VC funds. We're acting as an LP in that case, a limited partner. And on the other half, to invest in deals and directly into startups. And there's a lot of nuance within that I'll get into, but just to answer your question at the higher level is, the deployment of capital or provision of additional capital to the region who needs it, and in areas that were not receiving it prior to that, and I'll get into that a little bit. But we have, you believe it or not, as a fund, we have so many of our KPIs are not related to the deployment of that capital. Certainly that is our job, but it's to hit other KPIs that align with the national agenda and Dubai's agenda. And that's including bringing talent, including making the ecosystem a healthier ecosystem, providing more thought leadership on what standard best practices are and how to, behavior of founders, behavior of VCs in the market, to create a healthier ecosystem and really to attract international tech to Dubai and international capital to Dubai. And that's in many forms too, at all levels. Again, so we want to attract VCs from the rest of the world to establish themselves and invest here, but also to attract LPs to start investing in the funds here, because you know what? The funds here are performing really well.
What is the focus of the fund? I mean, what stages would you be focusing on? And also from a geography perspective, is it predominantly Dubai, UAE, the region, or you will be looking at global deals?
That's a really loaded question, and it's something we're practicing saying all the time because we need to get the message out there the right way. But let me start by saying the way that the fund is structured it's structured as a permanent fund model. So I'll joke that, Sequoia's announcement last month, they copied us. But that's how it is. So when you're a leader, I'm joking, guys. But they became a permanent fund recently. Andreessen before that also became one. So VCs in the US, almost all VCs fall under the SEC's VC exemption, which is you can only be a certain size, you can only raise from certain things, and you can only do private equity deal and private investments into private companies. You can't be an advisor, you can't do crypto, you can't do all these things. So the reason we all stay under VC exemption is because the requirements to get out of it, you're now like a hedge fund, or you're going to be, the requirements of reporting are way, way more intense. But these guys are bigger, right? And they're doing more things. So they're able to get out of it and pay for the administration of that. Most other funds don't. Outside of the US, you don't necessarily have that straight black and white restriction. For the Dubai Future District Fund, it's set up from the beginning as a permanent fund. Number one, because as a government supported entity, we don't have the same return horizon a private fund has. So VC funds are typically 10-year funds, typically, give or take a little. That means the time clock starts that when they take the money on day one, they start investing it, when the returns come, has to fit within this sort of timeline. Not exactly, but it fits within that curve. In a permanent fund, we don't care when the returns come, which fits, right? And it's logical. It fits the government's perspective is we're building really long-term value. So I don't care, I'm not gonna force an exit in a position I'm in 5 years because I need the money so I can go fundraising and show traction, which private investors tend to do. I'm in it for the long run, right? And as a government fund, that's the right fit for us. Now, in order for, we added some other thing to the fund, which is the team that's working on this fund is performance aligned. And the way to align performance on fund managers is you pay them a percentage of the profit. So if a permanent fund structure is like this and a private fund that pays performance normally is like this, how do you bring those two things together? So the structuring and design of this fund was something that took a couple months, right? A lot of thinking about, we want to incentivize the right thing in the people that we bring, and at the same time provide the right thing to the ecosystem that doesn't have it. Now let me get into the detail of what that means. So one level down from that is we're doing 50% fund of funds, 50% direct. From a sectorial point of view, we're looking at future of finance, which is a very broad sector in itself because there's about 15 or so subsectors. And then underneath those subsectors or subverticals, there are horizontal themes that we care about a lot, like financial inclusion, right? That is a horizontal theme rather than a vertical. On the other side, our other sectoral pillar is what we call future economies. Future economies, for most people, is pretty vague, but and for us, I mean, it's been challenging to define it, and we have to define it so we know what we don't do, and so we know what to say we do. And the way we look at future economies, especially as Dubai now, so I'm putting on someone almost as a policy hat or an economist hat, which I'm not either one of those things. But we look at the world economies in 2050, which you can read PwC reports, the WEF reports. There's over 100 reports on 2050 economies out already. And Dubai Future Foundation's releasing one in the next couple weeks on this as well. So what's so fascinating about thinking that far out is we're talking 30 years, right? And anybody here can raise their hand and say they predicted NFTs 10 years ago. Elon Musk tweeted a couple weeks ago that there was no way that we would have predicted where technology is today 10 years ago. We didn't. I was deep in it myself, didn't predict it. All of these guys, no way we would have known. It's just the way technology leapfrogs, right? And it just splits and bifurcates, you just can't tell. So if we're thinking about, and it accelerates, by the way, from the 70s to 80s, it was a slower movement than from 80s to 90s and so forth. We all know that about expansion. So from 20s to 30s, where are we going to be? And then from 30s to 40s, where are we going to be? 40s to 50s. It's mind-blowing. We sat in a think tank workshop, me and the team, about this 2050 economies, trying to understand, okay, I get what you futurists are all talking about, but I need to invest today. So that's the challenge our team has, is we need to invest today and have a return horizon for technologies that are applicable today, in the next 5 years. And most investors, they think they're future investing, but they're really investing in today. And the next curve would be like, okay, we think autonomous flying, everything is going to come out. But if I invest in it today, I'm probably going to lose my money, right? Because it's not commercialized yet, it's still got some time. So that's where we think the government owes it, right? Or has an obligation to invest in areas that require patient capital, where the private market simply cannot do it because their return horizons are shorter than it allows. And I'll give you an example, and there are funds out there that do that, but they're mostly government supported or grant programs, research grant programs. Why? Because those deeper technologies like frontier tech and deep tech require a long R&D phase, a lot of research, and 99% of the research doesn't get utilized. It's that 1% breakthrough that finally gets commercialized. But it pays for it all at the end. And then second, a lot of these things require a lot of capex, which means just much more money to get to market. So a traditional private VC will tell you, we don't do pharma, we don't do energy, we don't do hardware, we don't do this, we don't do agri-tech, well, these are all really important 2050 things, right? So as a government, we want to start this initiative of, at least from a mindset point of view, that we will plug the gaps in funding in those areas because they're almost vital to the survival of countries, the investment in those areas.
Great.
Tie that back to where we are today and you all kind of get it. It's like with COVID, remember we said sort of walls going up, food security, medical security, supply chain security in country is a big focus for everyone. Well, not everybody's tooled to do all of those things in-house. So you're going to start buying from other countries, well then you're importing. Importing is counter to future economies because the more you import, the less self-sustainable you're going to be. So I can see in everyone's eyes this is getting a little too much. So, but this is the problem we have to face, not that you have to commiserate with us. But it's the point. It's why we're starting the fund and why Dubai, seeing 30 years ahead of where Dubai and UAE and the region want to be. How are we going to be there when the 2050 economies that are predicted to be the superpowers in 2050 are not the countries that you think are going to be the superpowers?
Yep. So
Nigeria, Indonesia, Egypt, Turkey, Malaysia. Why? Why is it those countries, right? They're E7. There's the E7, the G7. China and India are both going to be there. They're big now, they're going to be big later.
Yep.
At least predicted to be. The G7 countries, most of them are going to shrink. At least the growth is going to slow to single digits, or less than single digits, so much that they're going to start to collapse. Not to say, oh my God, US is going to fall. Like, it's not like that. It's just, they're not growing, others are growing, right? Relatively speaking. So then the second question to ask is, what are the drivers causing those economies to grow? Number one driver, can anyone guess?
Any guesses, guys?
Human capital is close. Population growth. It's as simple as doing nothing. It's going to happen. If we do nothing, it's still going to happen.
Exactly.
So you can't stop it, right? You can in some countries, but population growth. So it doesn't mean that that's a good thing they have it and a bad thing we don't have it. It can be a problem for them. So take Nigeria, a couple 100 million. What if it becomes, it's expected to double. So the entire world's population is expected to double by 2050.
Yep.
That alone is going to present massive problems. Think of food alone, food security.
Yep.
Is a good enough one to think about. Energy is another one. But these are big, big problems, and they're not what your retail investors are going to be focused on every 5 to 10 year period. Or actually the VCs invest every 3 years.
Yep.
Right? 10-year funds have a 3 to 5 year investing period. These are the cycles that they have to think about. And the return cycle is within 7 to 10 years, I need to return that money so I can raise again and do it again. You need a much longer horizon to think about the sort of deeper things and the longer term things that we're trying to do. So that just talks about sector.
Of course.
Stage-wise, because we want to support more VCs and the existing VCs, we don't want to cannibalize the work that they're doing. And so stage-wise, we will dabble a bit in pre-seed, seed stage, but primarily our direct investments are going to be in Series A to Series C, institutional rounds, complementing, and I think majority of those those Series A to Series C will probably be co-investments with the funds that we're invested in already.
Yeah.
And most of the funds we're probably investing in are covering it just because of the nascent market, the nature of a nascent market. Most funds cover seed to A or seed to B. It's just how the ecosystems work.
So where does the fund stand today? Are you guys set up? Have you started looking at deals, or would you start soon?
Yeah, so we were mainly focused on setup from August to November. The announcement of the fund went out in November that we were launching, and that's when the website went up and the applications went up, and now we started to receive applications. We have fund applications and startup applications. The first investment committee meeting is slated for the end of this month. Some funds will go up, some deals will go up for decision. I think sometime in February is when we're going to do our first capital call. So the fund has started, but we hold the capital call because once the money lands in the bank, the time starts on the IRR calculation. So IRR is a time-based performance metric.
So how can startups that are based over here all across Dubai and the region apply or get access to Dubai Future District Fund?
Well, we'd love to hear from everybody. We have a really simple form on the website. It's df.vc or futuredistrictfund.com or another 10 domains. You can get to us pretty easily. It's also on the DIFC website. There's a link to our website. So we'd love to see you at any stage, any sector. Don't worry about those kinds of things. We have defined thesis, but we're also trying to stay open, right? Because again, we're trying to identify gaps. And if we see 45 startups in femtech and not a single investment in the region happening, we know there's a gap there. So we need to see the audience, right? We need to see what the demand is. And that demand also feeds into our future fundraisers and how much more capital do we think the ecosystem needs. So it's important to hear from everybody. And depending on the stage and the sector and the geography that you fit, you may be a fit for us now, or you may not be, right? So that's a disclaimer. Yeah, it might not be a fit. And that's because even through our investments, we have to stage the way we do our investments. We can't cover everything at once. First of all, we don't have enough capital in day one. We're going to work on that.
Thank you for sharing your story. Just getting a little bit specific, I know everything's in flux and everything. On the pre-seed seed rounds, what kind of checks are you writing, or what's the number on the top of your head, and what position are you taking?
$300,000 to $500,000 pre-seed, 500 to 700 seed. What position ownership we're taking? That's dictated by a lot of factors of we don't have a position that we just start like 5%. Like it's not an accelerator program with an application. It's deal by deal. So whatever the companies happen to be at, we negotiate it.
My name is Sultan. I'm from Kazakhstan. So I'm a member of Kazakhstan Association of Miners. Are you interested in the mining farm investment, or this only for startups? Thank you.
Well, first of all, I hope everything's going all right there these days, and I think the mining is getting quite affected, right? But it's not something I've thought about at all. We have to think about it whether it is tech or not. And the way we think about tech, at least prior to getting into the deeper hardware and deep tech stuff, the way we think about something is tech enabled is that technology is the product or technology is the distribution channel. So if you think about e-commerce and they're selling diapers, diapers is not tech, but it's the distribution channel that the internet enabled is tech. And so I think I come from a marketing and product background. So like the distribution channel is what made all of this possible. Like we can sell a widget 100 million times an hour because of the way that we're selling it versus before. The mining facility itself is a real estate project to us. So it's kind of like WeWork, but I won't talk about WeWork. So it's more real estate than tech for us. It's going to be extremely CapEx heavy, and we don't know what the exit profiles of a mine look like. At least I've never looked into it personally.
Yeah, hi there, Sharif. Cash funding is great, but investors also bring a lot of value through the networks they can introduce, the assistance and advice and the doors they can open, particularly in this region for early stage. Are you sort of setting the fund up or staffing the fund to be able to bring this type of additional value to your investments?
I think I heard the question was like the strategic value that we might be able to bring to the table.
Yes, yeah, in terms of opening doors,
Yes,
introducing to your network of other investments,
In the startups.
helping with regulators.
Yeah, thanks for reminding me because I don't think we mentioned that. But that is a huge part of why somebody would approach us or why we would invest and why they might receive our investment is because of the strategic value of our stakeholders, strategic value of everybody around the fund, right? This is a pretty high profile fund. It's important to a lot of different departments within Dubai and the UAE, and that access is something that our team is meant to leverage. It's not even a favor, and it's not asking a favor. They're actually expecting it, and if we don't do it, we'll miss our KPIs. So it's an onus on us to do that. We're having right now a lot of discussions with some of these startups or funds where regulatory environment, licensing, business development, championing, even just somebody to be a customer, like I was saying earlier, is really important for them. And it is something that is not easy, but relatively accessible for us to do. So that's a big part of why we're here.
Sharif, I want to thank you for coming.
Thank you.
And we want to thank our audience.
Thanks, everybody.